Hi, this is Adam Strauss, portfolio manager with Pekin Hardy Strauss Wealth Management. I'm here with my colleague and partner, Matt Blume, who recently published an article about long-term care insurance. So we're here to talk about everything related to long-term care insurance, including what is it, what are the components of it, who does it make sense for, should I be buying it, and if I should be buying it, what kind of long-term care insurance should I be buying? Matt, why don't you begin with just talking about what long-term care is, and after that, what long-term care insurance is?
Sure. Yeah, so long-term care is sort of an umbrella term that describes medical and non-medical care that a person might receive when they have physical or mental infirmities that basically prevent them from carrying out daily living activities, such as bathing and dressing and eating and things like that. So it might be in-home care, it might be skilled nursing care. So it covers a broad range of types of care, but they all fall under that umbrella of long-term care. Long-term care insurance is an insurance product that effectively just covers some of those costs, because the cost of that type of care can be very expensive. The US average is about $200 a day across that broad range of care types, with the lowest being in-home care and the most expensive being that skilled nursing care. But at even an average of $200 a day, that can obviously add up quickly. And so long-term care insurance helps to cover those costs when they are needed, so that it doesn't have as significant of an impact on a person's financial situation.
So when you say helps to cover the costs, it doesn't cover the costs. Is that correct?
Not necessarily. It depends on the level of care that a person's receiving, and therefore the cost of their specific care. It depends upon the language of the particular insurance policy. The way that these policies work is they actually have a few components. There's what's called the max monetary benefit, which is stated in a daily rate, saying it will cover X dollars of care per day. Then there's the max life of the policy, which is the period of time over which that policy would pay that daily rate. So in reality, the value that a person is buying when they purchase a long-term care insurance policy is actually those two numbers multiplied, right? So the daily rate times the max life is the amount of coverage, the total dollar coverage that policy will cover. Whether it's over 3 years or 5 years or whatever, it doesn't actually matter what the lifetime policy, the max life of the policy really is. What matters is that total pool of benefits. So if a person is in long-term care for many, many years, usually that's with like a mental infirmity, they can run way over what the insurance policy might cover. And there are two other components as well. There's an elimination period, which is a period of time from when a person qualifies for long-term care until when the policy will start paying. And typically that's something like 90 days. You can also see 120 days, some say 30 days. The typical policy is 90 days, and that's effectively like a deductible. If we think about our other types of insurance that have deductibles, it's sort of like a deductible. And then the last thing is the inflation adjustment. So many of these policies, because you might buy it when you're in your 40s and not need it until you're in your 80s, and obviously the cost of care can rise significantly over that period of time. So there's an inflation adjustment that's in many of these policies, not all of them, but obviously that has a cost associated with it too. But so anyway, that's how they're structured. So it may pay for all the costs that a person incurs, it may not.
To help me understand, I just want to ask a follow-up related to maximum monetary benefit and maximum life. What is the typical daily maximum monetary benefit, and what is the typical maximum life? And therefore, what is the typical insurance policy maximum total that you often see out in the market these days?
So that's a really tough question because there really isn't a typical. What you see all sorts of shapes and sizes for these policies, and they're highly customizable. What we used to see, a lot of unlimited policies. Those existed for people who bought them back in like the 80s and 90s. A lot of the companies were willing to provide an unlimited pool of benefits, but over time, they've seen that that didn't really work very well because people were living much longer, costs were rising very quickly, and so the premiums that people were paying really weren't covering all of the costs that were being incurred. So nowadays, you might see one that covers $300 a day for a year. You might see one that covers $600 a day for a decade. We see everything. I can't really say that there is a typical length or a typical daily coverage, and there are still some of these unlimited policies in effect as well. So there's really the entire spectrum.
For somebody who's thinking about whether they should be purchasing long-term care insurance, what would you advise them? What considerations should they be thinking about?
Sure. So we kind of think of it as there are four primary factors that really should go into this decision. So the first one is, how much money do you have, right? If you have a significant amount of money, you can really afford to what we call self-insure, simply saying, I'm going to take the chance that I may not need long-term care, so I'm not going to pay the premiums. But if I do need long-term care, as I age, something happens, then I have the wherewithal to pay that out of my own asset base, right? Typically, we put that number around $1 million. If you have less than $1 million, then a prolonged long-term care stay could actually really have a major adverse impact on your finances. If you have over $1 million, you're probably more in that category of someone who can afford to self-insure. It's not a hard and fast rule, but that's sort of where we draw the line. The next thing would be family situation. Some people, they have children who have the ability to help take care of them, or people that live near them that can help them if they need it as they get older. Obviously, your health situation, and that applies to both the individual as well as their family health history. So if there are certain types of genetic infirmities that run in the family that might increase a person's possibility of needing long-term care, then that needs to be considered. And then obviously, if somebody has health issues or whatever that might contribute to that, they need to think about that as they're considering, because obviously that raises the probability that they ultimately need this type of care. And then the last thing is your age when you're considering buying a policy, because if you're buying a policy when you're 40, your risk to the insurance company is much lower, so you're going to pay much lower premium, at least at the outset. If you're buying a policy when you're 70, it could be prohibitively expensive at that point, because to the insurance company, you represent a very high risk of them actually having to pay out. So the difference in premiums would vary significantly depending upon your age when you're purchasing the policy. So those are really the primary things that you should think about when you're looking at a policy.
So just to use two extremes, if I have $10 million in assets and I'm healthy and I have plenty of family around, probably not going to want to buy long-term care insurance.
It's not going to make sense.
On the other hand, if my net worth is $250,000, I don't have any family, I think I've got some health issues, and it's quite possible I could end up needing long-term care, I'm probably better off buying an insurance policy.
I think that's right. Generally speaking, I think that would be correct, because that's a person whose finances can ill afford that big hit. It's somebody where the probability of needing that care is relatively high. You don't have any family to fall back on. For all those reasons, assuming that the premiums were at a level that was affordable, that person would probably want to look at a long-term care insurance policy.
And of course, with most people, it's not so cut and dried, black and white. where it's obvious that you should buy the insurance or not buy the insurance. So if I'm not sure, I would assume that it's probably a good idea to go to my financial advisor and get some advice about what to do in this particular situation.
I think that's right. I think you want to run this past somebody who understands these types of policies. They can be complex like other insurance policies, a lot of moving parts. So you really want to have somebody who understands it, weigh in on it, preferably somebody who doesn't sell insurance, somebody who's going to be an unbiased observer, who can give an unbiased opinion on it. I think that's right. You want somebody to take a look at it and make sure that it fits your situation and that it's the best of the various options.
Well, this is all very helpful. Is there anything else that we should know about long-term care insurance that we haven't already discussed together?
Yeah, I think the one last thing that's really important for people to understand is, well, there's sort of two things. So even though the probability of a person needing long-term care is actually relatively high, right? It's something like 70% of all people who reach age 65 will need some form of long-term care. While that's true, only about 5% of people who need long-term care actually incur $250,000 or more of costs. And so what that's saying is that even though a person is likely to need it, the costs are not typically devastating for most people. And along with that, something like it's like 70% of all people who go into a nursing home are actually discharged within 90 days. Most long-term care insurance policies have that 90-day elimination period. And so even though they use that care, they aren't able to actually make the claims on the insurance policy. So while it seems very, very scary, the possibility of these really high costs, probabilistically, the odds that a person really incurs these enormous costs are actually relatively low. So that needs to be factored in. And then the other thing that people need to think about is that the business model of writing long-term care insurance policies has become very unattractive for these companies. And something like half of the 20 or so companies that were writing policies 10 years ago are no longer doing it. They're only they're honoring the policies that they wrote, but they're not writing new ones. And that's because what I mentioned earlier, people are living longer, the costs are rising quickly. And so it's really putting a lot of stress on these insurance providers. So you have to think about the financial strength of the company that you're buying from, right? Because they have to be able to cover the costs. And then you have to also be aware that premiums that you pay are likely to go up. We've seen instances in recent years where state regulators have approved increases on premiums of almost 100% overnight. So if somebody locks in a policy, they start paying that premium and they think this is the premium that I'm going to pay. In reality, it's not. Over time, they're going to end up paying significantly more because these companies keep having to increase the premiums in order to honor the policies that are in effect. So you have to be aware that it's very likely that you'll end up paying a significantly higher premium over time. And we're seeing it where some companies are implementing multiple price increases in a single year. And it's sort of a spiral. And so I think that has to be factored in when you're thinking about buying a policy.
Sounds like product where really the buyer has to be very beware of what they're getting into, not only in terms of what the product is, but what the price is and what the price might become in the future. And again, going back to a point that we made earlier, also a situation where you probably should be consulting with your financial advisor about how to approach this this whole area.
I think that's exactly right.
Matt, this was great. Thank you so much for your advice and your expertise. No problem. And we'll talk to you later.
My pleasure. Thanks, Adam.
Bye.